Hi guys, my name is Colin and this is Colin Talks Crypto. In this episode, I'm going to read you a single page from the book, The Psychology of Money by Morgan Housel. This book has a ton of great chapters on many different aspects of investing, but there was one in particular that struck me as interesting and especially relevant to the topic of the CBBI, the Colin Talks Crypto Bitcoin Bull Run Index. And I'm going to read this page to you and then relate this to the CBBI and my view on the subject. So it goes like this. Stanford professor Scott Sagan once said something everyone who follows the economy or investment markets should hang on their wall. Things that have never happened before happen all the time. History is mostly the study of surprising events, but it is often used by investors and economists as an unassailable guide to the future. Do you see the irony? Do you see the problem? It is smart to have a deep appreciation for economic and investing history. History helps us calibrate our expectations, study where people tend to go wrong, and offers a rough guide of what tends to work. But it is not in any way a map of the future. A trap many investors fall into is what I call historians as prophets fallacy, an over-reliance on past data as a signal to future conditions in a field where innovation and change are the lifeblood of progress. You can't blame investors for doing this. If you view investing as a hard science, history should be a perfect guide to the future. Geologists can look at 1 billion years of historical data and form models of how the Earth behaves. So can meteorologists and doctors. Kidneys operate the same way in 2020 as they did in 1020. But investing is not a hard science. It's a massive group of people making imperfect decisions with limited information. So that's what I wanted to read to you guys. That's just one page. That's page 123 of this book, The Psychology of Money. And it struck me as interesting reading that page because that page seems to directly refute the CBBI. The CBBI is a collection of metrics, all based on historical data and all drawing conclusions on historical data. You know, we're saying that the peak is going to occur at a certain place because past peaks occurred at certain places. And we have 12 different metrics, all in their own way, kind of saying that same thing. And we are, of course, combining them all into an aggregate sum and an average to try to smooth out any particular bias or erroneous metric and also our own human bias. But nonetheless, it is true that the CBBI is relying 100% on past historical data. However, the reason that I feel the CBBI has a better than zero chance of being correct is because not only is it looking at the past historical data, but it's adding one other very vital element into the mix, and that is the Bitcoin Halving Event. And I'm going to do my best to portray the way that I see the CBBI and its potential effectiveness in stark contrast with this page. Not that this page that I read to you is wrong by any stretch of the imagination. In fact, I would say that it is correct, 100% correct, that basically past performance is not a guarantee of future performance. So then how and why does the CBBI exist? I guess the best way for me to answer that is to answer it almost in like a negative. I would say that the CBBI would not work if it were not for the fact of the Bitcoin Halving Event. The Bitcoin Halving Event is the sole factor for why the CBBI has some chance to be correct. And even then, it's not a guarantee. It is an experiment. It is in beta. We are testing it out. But I think that it has a greater chance of success than this particular page lays out, because in Bitcoin we have one factor that is present that is not present in any other investment class that I know of. If you invest in Tesla stock, you don't have any mathematically predictable supply reduction. or Apple stock or Microsoft or any of these other stocks. Take any stock and tell me that there is some predictable supply reduction or effect on supply that you can calculate exactly down to the day. And we have that with Bitcoin. And Bitcoin has that one secret investor tool. I apologize for the crow or the bird above me. He doesn't like me talking about Bitcoin. He's clearly a Bitcoin hater. So you know how we handle haters. We just keep on going. And so I just wanted to bring that to your attention, that the Bitcoin Halving Event is really the one key factor that makes it possible to have some level of prediction. I'm not saying that it's perfect. I'm not saying that it tells you exactly what price you're going to get to or how long the bull run will go for, but it does guarantee, assuming a constant or increasing demand for Bitcoin, an increase in the Bitcoin price, because you have a baked-in halving of the supply issuance every 4 years. Now, as time goes on and as subsequent bull runs occur, the influence of these halving events becomes less and less, because half of a half of a half is less than just half of a half. And then if you get 4 halvings, it's even less. And 5 halvings, the impact is even less. So over time, I do think that the ability to predict the bull run peaks and the bear market bottoms will become less easy. I think that it will become more and more influenced by random market influences and less by mathematical supply reduction. But we're not quite there yet. And I think that we still have a very heavy influence of the halving event on Bitcoin's price. So maybe in 2 or 3 or 4 bull runs from now, the bull run peaks and valleys will be completely independent from the halving event, because the supply issuance is such a small percentage of the change and influence to the Bitcoin price. And other things like black swan events or inflation, the Federal Reserve printing huge amounts of money, or other economic forces will have much greater percentages of influence on the Bitcoin price. But until that happens, I think that it's smart to take advantage of something that's baked right into the code, something that is plainly visible for everyone to see if you're willing to understand it, which is honestly a very, very small percentage of the people on Earth. If you take a look at the percentage of people that merely know about Bitcoin, it's probably a couple percent, low percentage. Then you take the percentage of people who actually own a Bitcoin or own some cryptocurrency, and it's probably like 1%. And then you take the percentage of people who actually understand how Bitcoin works, specifically regarding the halving event, and you get probably 0.001%. And that is the advantage that investors have while the halving event does remain such a significant influence on the Bitcoin price. So guys, I just wanted to read that page for you and paint that picture of why, if it weren't for the Bitcoin halving event, I don't think that we could have any kind of better guess as to the peaks and the valleys. But we do have this advantage. We do have this factor that is mathematically baked into our investment. And I challenge you to name anything else on Earth like that where you have that advantage. So this is our golden opportunity. Let's take advantage of it while it lasts. And I'm super excited about this bull run because of that fact. And maybe even the next bull run as well. I will do my best to make sure that the CBBI has its best chance at predicting the bull run peaks and valleys. It's never financial advice, because honestly, we could all be wrong. We just hope that we are as right as possible and that we use as many tools, such as the Bitcoin halving event supply reduction, as one of those tools. Have a great day, guys, and have a fantastic bull run. I'll be back again with you soon, and we'll talk more Bitcoin.